Hello, everybody. Welcome to this week's live stream where we're going to be talking about Zoopla's latest house price index, which was released, I believe, yesterday or earlier today. Can't quite remember. If you are new around here, my name's Lee Everett. I've been an estate agent in North Essex. Also helped navigate through the difficult mortgage market to the report. Which was, I say, released maybe yesterday. Yes, I can't detail. So the top insights: the annual UK house price has gone up by 0. Was a hell of a lot higher, so it has been gradually coming down, and we're now only 0.6% higher than what we were this time last year. Bit of a drop that. Over the last 3 months, Zoopla have found that buyer demand has actually gone down by 18%, which is a hell of a lot of a drop in people looking to buy a property. But when you do marry that up with what's going on with the cost of living, along with interest rates for mortgages, it's not very surprising. And they predict that house prices over the next year will fall around 5%. So I'm not sure if they ever published what they thought house prices were going to do. Yes, I do. They said 10%. I think they said 10% last year when Zoopla done their end of year review. They predicted a 10% price decrease in 2023. So it looks like they've revised that somewhat by 50% to 5% drop. So yes, let's get into it. So higher mortgage rates have hit home buyer demand, but the impact is not uniform across the country. Southern England is set to experience above average price falls, while some areas may not post any price falls at all. Now, this is very important when you are thinking about buying a house. If you are waiting for property prices to crash further and further and further, it is very localized. And I say this on many video and live stream that every town has or is its own micro market and can be completely different to the next town down the road, or even a different parts of the same town can have different markets. It's as simple as that. We've got 2 or 3 areas in the space that I deal with and sell houses where some property prices have dropped a hell of a lot more than others, and we're talking within half a mile, sometimes even 500 yards of each other. Being a certain location can really impact how much somebody will pay for a property. There's a very affluent place near my town, which during the last downturn in property prices back in 2007, 2008 was insulated a hell of a lot from the downturn in house prices because of how popular and how much in demand those houses were in that particular little part of the town. So yeah, it will massively vary from town to town, sometimes street to street. So yeah, bear that in mind before you sort of thinking, oh, I'm waiting for prices to drop X amount of percent. They may not do that in your particular area, or they may go a hell of a lot more than what you thought they would. So you've got to do your own research and decide when's the best time for you to buy, rather than listening to average statistics, because it will vary from area to area. So market performance in line with 2019 levels. So a lot of the indices will be comparing all the data. I didn't actually share the screen, did I? There we go. There's the screen. A lot of data with 2019. And when they do that, that's because they're saying that the market in 2020, 2021 and 2022 was an abnormal market, which it was. It was highly inflated, highly competitive. So a lot of the indices do go back to 2019, which was a normal market, which does, to a certain degree, picture things not as bad as other people may say. When you compare it to 2021 and 2022, house prices have dropped. Demand has dropped, inquiries have dropped a hell of a lot. But when you compare it with 2019, it doesn't look as bad. So read into that what you wish. But yeah, it's one of those things that you have to be careful where the people are sourcing their information on and where they're comparing today's figures with the figures they're comparing it with, obviously. So this is compared to 2019. So just bear that in mind. So they reckon demand for houses the last 4 weeks has gone down 6%, which means the month before it went down 12%. So over the last 2 months, 18% drop in buyer demand. Number of sales agreed, only down 1%. Now, I would agree with that where I am. I'm in a relatively affordable part of the southeast of England where we have a lot of people looking to downsize to or release equity and buy cash down in our sort of area because we are still commutable to London. And yeah, we're very attractive to a lot of people. So our number of transactions hasn't really suffered too much in terms of how many houses we are selling. Touch wood, as I'm saying that, because I don't want that to change. The flow of new supply, they're saying it's up 2%. Yep, for me, we're taking on a hell of a lot of properties at the moment, a hell of a lot of properties, and with more properties coming onto the market. Um, and less sales being agreed, you should be seeing that number being going up. But remember, they're comparing this to 2019, not last year. So if they were comparing with last year, we're going to be seeing, or the year before, this number here, the number of sales agreed be a hell of a lot lower. The flow of new supply would be a hell of a lot lower, and the stock for homes for sale would be even lower because there was literally next to nothing available back then. What else are they going on to say? Let's scroll down here. Demand falls 18% as mortgage rates spike higher. Demand for homes recovered over 2023 half one as mortgage rates fell towards 4%, which I think is where we're going to be seeing mortgage rates. That will be the new normal, around that 4% mark, which unfortunately for me will be double what I'm paying right now. And unfortunately for a lot of people who have bought in the last sort of 5-6 years. Support an increase in new sales. We definitely did see that. Mortgage rates rising quickly over the last 6 weeks towards 6% has reduced buying power and hit demand, which has fallen by 18% over the last 2 months. The decline in demand is less stark with that recorded in the wake of the 2022 mini budget, or when the first lockdown was introduced. Demand has weakened off at a lower base and is currently running 6% lower than 2019 levels. Year on year, demand is down 40%, but sales agreed are only 17% lower. So what that tells me is whenever Zoopla are reporting a demand in people looking to buy properties, so say it's 20%, then maybe the actual amount of sales agreed may only go down by 10%. Not everyone looking on Zoopla or Rightmove is a willing, able, and committed buyer. You do get your window shoppers, you get people who are just toying with the idea. So that would, for me, being an estate agent, that's a positive, or not as bad as the headline just makes you think. If only half the amount of people who are looking, and I'm guessing here, are genuine buyers who are able to buy, then I would half the amount of sales that are agreed or should be agreed rather than going the whole amount of buyer demand dropping. That would be what I would do personally. But I say that's just my view. House price inflation slows to plus 0.6%. Weaker demand and rising supply have driven a rapid slowdown in house price growth. UK house price inflation is currently running at 0.6% from June 2023, down from 9.6% in June 2022. So they've seen a 9% drop in house prices in the last year. There's a clear split between trends in the southern England and the rest of the country. I'll be bolder to say that that trend goes a hell of a lot more deeper than just the north-south divide. Again, there's a lot of variables and a lot of different markets within the north and the south. So yeah, I'll go a little bit more in depth with that. They go on to say the barriers to first-time buyers are also greater, weakening demand for buyers who support the bottom of their housing chains. So what they're saying by that is every chain will start off with a non-dependent buyer. If you're a first-time buyer, that would be you, or if you're a cash buyer or somebody who's remortgaging to buy another property or buying a buy-to-let, you'll be a non-dependent buyer. And if this demographic is struggling with affordability or struggling to get a mortgage, then that will have a knock-on effect on every other person in a potential chain. It's like a domino effect. Without that first domino to fall, nothing happens. Nothing happens. So if there's no first-time buyers or no investors looking to buy, then pretty much nobody moves unless we're doing part exchanges or swapping deals, which isn't too common, to be honest with you. Um, House prices are falling by up to 0.6% year on year across all four regions in the southern England, as well as Northern Ireland. In contrast, house prices continue to register annual price growth of over 1% across seven other regions in the UK, led by Scotland, where house prices are 1.9% higher than a year ago. So there we go. It's important to drill down into your local area to find out exactly what is going on. Reports like this, I don't think, go specific enough or into enough detail for people to make a real informed decision. This is what I found interesting and can relate to. Markets with prices over £300,000 most exposed to falls. Drilling below the regional levels, it's clear that housing markets with average prices of over £300,000 are feeling the impact of higher mortgage rates more than others. I would 100% agree with that. What I'm finding right now is that the would-be buyers of last year who would have been able to have bought a 3-bed or 4-bed detached house at over £300,000 in my area are now unable to do that. We're now selling 2 or 3 bedroom semi houses to first time buyers because they've had to adjust what their affordability is and their expectations on what their money will actually buy. It's really low. And remember, the 2% mortgage rate is historically low. A lot of people could buy a bigger house than what they actually needed. And if you've watched this channel before, you know my saying is always buy the house you need, not the house you want. Don't stretch yourself. There's no need. There's no need. So yeah, those buyers are now having to sort of adjust and go, right, I would like a 3rd bedroom or a 4th bedroom, but I don't need it. So now let's buy a smaller house, get that affordability in line with what we can afford with the new increase in mortgage rates, and then buying those smaller houses. And for me, sub 300 or 280 to 300 is probably where my office in particular, we don't sell as much over that, especially at this moment in time. Some 4 in 5 local markets currently registering annual price falls have average prices over £300,000. The chart below shows annual price growth compared to average house prices for 121 UK postal areas in June 2023. We'll go down to that in a second. Higher house prices mean larger mortgage, bigger deposits, and a higher household income required to buy a home. Pretty standard. The more the income needed to buy increases, the more households are priced out of market, which reduces demand and pushes prices lower. Basically, those 3-4 bedroom houses, they're the ones which are having to reduce their properties more in order to get sold. What I found in my area, so I keep looking at the wrong camera. What I found in my area is the price of the smaller houses and flats has not come down anywhere near the same prices as what 3, 4, 5 bedroom detached houses and larger bungalows have. So, and what that would say to me is that even though prices are coming down, it's still first time buyers, maybe second time movers who aren't feeling the benefits of these prices coming down because they're not coming down as much as in terms of percentage, as much as the bigger houses. They're having to make huge drops to get sold, whereas the smaller houses aren't having to take too much of a price drop at all. That's what I'm experiencing in my area. You might find it completely different where you are. So it'd be interesting to know where you're watching this from and also what you're experiencing in your local area. Bear with me. Hi, Christine. Let's just get some questions up on here. Hi, Lee. Yes, affordability should have been considered 20 years ago. Silly banks letting people borrow more multiples of their salary than what is usual. Yeah. And where are we here? People downsizing because of the cost of living here. Yeah, we're getting quite a lot of people who are looking to downsize in general, not just because they can't afford it, but what we had during the pandemic is a lot of families looking to move closer to each other, and we're still finding that with an aging population. We certainly have a lot of older family members selling up, moving to be closer to kids or grandkids to help with any care they may need as they get older. And the pandemic sort of made that go a hell of a lot quicker. So we're noticing that. Maybe that's to save on care home fees and carers. I don't know. But yes, there are certainly people who are rumbling around in big family homes that don't need them, who are looking to sell. And it's certainly getting more and more people looking to do that because it is costing a hell of a lot to heat homes. It really is. Yeah, mine keeps going up. I keep telling the missus to turn lights off, but she doesn't. And you're in West Sussex. Nice. Not too far away from me. Not too far away. A couple of hours drive. I suppose that could be far. Right, let's go back onto this. Markets across the southeast of England are leading annual price falls, particularly in commuter markets adjacent to London. Different to what I'm experiencing. These are led by Southend at minus 1.5%, Watford 1.2%, and Northwest Hertfordshire at 1.1%. House prices in London are all falling, but to a lesser degree than may be expected. This is because residential values have registered very little price growth in recent years. Yep, so London, I'm sure you heard it, during the pandemic, there was a lot, not a lot of people wanting to move to big cities, and London being one of them. London was absolutely one of them. People were looking to get out of the rat race to find, yeah, yeah. So I've just read a comment. Steve M, hang on. Can you give us an update regarding the house you got thrown out of when you gave the occupants a valuation? Has it sold yet? It hasn't sold. It got reduced again. Still not to the figure that I said back in January. I think it was, Steve, wasn't it? It was January that I valued this particular bungalow. And in fact, I was picking my little boy up from nursery today, and the owner of the estate agent who took that one onto the market was picking up his kid at the same time. And yeah, had a little chat about that one. But no, yeah, it's still on the market, and it's not going to get the price that I said back in January because prices have come down obviously a bit since January in our area. So yes, Steve, thanks for watching since January. Really appreciate it. Thank you very much. But yeah, I will let you know if that sells, and I will eat humble pie if it gets more than what I valued it at. But my prediction now is that it's going to be a lot less than what I said back in January. But thanks for asking. Yes, sellers do need to be more realistic, and agents need to be open and honest on their valuations to do this. It is so easy to just pander to what an owner wants and take the house on the market and then try and get them to reduce over the next few weeks. But that's not what my office or what my company does. We are very open and honest with our valuations. I lose out on so many properties to take on the market because it's just not worth my time and effort in selling when there are genuine sellers out there who do want to price their property realistically. I'm not talking about underpricing properties because, yeah, we don't undervalue properties. We value at what we think we can sell that property at. And I'm going to do a video on how estate agents should value a property. And it will differ to what agents actually do. And I know this because I've been in houses when the owner's booked in too many valuations in a short amount of time, and you're crossing each other at the door, or you can hear conversations from another room. It's yeah, some of the crap they come out with and the information they present to a seller is absolutely just rubbish, and they need to stop doing it. But I will be doing a video on how estate agents should be valuing property, and that's not for estate agents because they know what to do. They're just too scared to do it, at the risk of getting in trouble by their area manager or just basically having a frank and honest conversation with a seller like I did last week, where she wanted to put it on the market for more money, and I told her no, not to come on the market with me. If that's what you're going to do it with your current agent, because I can't, yeah, I can't be doing that. But yeah, I will do a video on expectations and how properties should be priced. Let's go back into this for a minute. I will keep coming back to check the comments, so I will come back. If you do write a comment, I will be back to see that. So that went up. So there's the graph of weakest house price growth. So you can see a lot here. Obviously, the London ones well below the line here. Many of them below the line. Southend, wasn't it? That was Hertfordshire. All that sort of area. But I'm not sure where FK, HX. They might be Scotland, Northern Ireland, but there's still a hell of a lot of postcodes that are not experiencing the drop which Land Registry is saying, which again, those figures are a few months behind. This, with Zoopla's data, is actual prices that they're being sold for. They've got information from Home Track, which is a really big property information company which they own. They get information from lenders with how much prices have been agreed at survey stage, so they know what's happening with agreed prices. And they're also a software provider, which for estate agents, which I really think they should pull information from the estate agents as well. That'd be a hell of a lot better. But that's not my decision. Affordability and strength of local economies important. House prices are falling in some lower value markets such as Sunderland, Aberdeen, and Northern Ireland. In these areas, local economic factors are impacting demand and additional to mortgage rates and the cost of living pressures. I'm not sure what's going on in Sunderland, Northern Ireland, Aberdeen, whether there is redundancies being made or cost of living is being felt harder more, but they are experiencing, quite some falls there. House prices continue to increase at an above average rate in affordable markets next to major employment centres. That makes sense. Higher mortgage rates have less of an impact on demand. For example, it's still cheaper to buy than rent in many low value housing markets, even at 5.5% mortgage rates. This supports first time buyer demand. The highest rate of annual house price growth has been registered in Halifax, Wolverhampton, and Falkirk. So you are seeing a few areas there where house prices are actually going up. So that's why it's very important. You need to look where you are living, delve into the data and into as much detail as you can. As much as you can. Let's see what's going on in the chat. Steve, seeing a lot of housing with several reductions in. I'm in Essex as well, Steve. So what I'm finding is it's the bigger houses that tend to be reduced. Not the bigger houses, the more expensive houses, the higher end that are coming down in price or having to reduce harder and faster. Let me know if you're experiencing that. I'm seeing very few properties at the lower end of the market that are actually having to reduce more than once, if at all. If at all. I took a 3-bedroom mid-terrace house on just before I went away this week. Within 3 days, had 6 viewings and one offer just short of the asking price. That's because we priced it correctly. And if you're a seller watching this, price correctly, and you should sell. You should sell. Don't just believe the highest estate agent. Christine is saying, yes, Steve, I'm seeing a lot of reductions in the market, on the market as well. Yeah. The sellers need they do indeed. They do indeed. Bonash, don't recognise you. Thanks for joining us. If you haven't liked and subscribed, please do so. Would love to have you part of the community. Wonder if there are any more fall throughs and properties being relisted. We've had a few fall throughs. I wouldn't say we've had any more than usual. I think the national average is about 25% of agreed sales fall through. So 1 in 4. We don't look at this data too often, which is something I should do a little bit more often, to be honest with you. But our abortive rate, or ABO rate, as it is in the business, we're generally lower than the national average. I'm not going to say 10%. I don't know the exact figure, but we are generally less than 1 in 4 actually go wrong, which is really good. And we tend to sell between 20 and 30, 40 houses a month. So even in this market, we're still doing strong numbers. So yeah, there are, for us, roughly about the same sort of fall through. Some months it may be more, some months it may be less, but on average, we're not seeing, touch wood, any significant change in fall throughs, but other areas might be different. I say you've got to look in your own data where you are, because it is very, very localized. Buyers. There are some buyers holding off. There really is. We go through our mailing list of about 300-400 people every other week to see if they're still looking. There are some people we call who say, no, I'm putting it on hold, but that's not first time buyers. That's sellers as well who are looking to buy. If they're not getting the price they need to get to make the move happen, and I say need because just because somebody needs that price to move doesn't mean their house is worth that amount. I think that's important to know if you are a seller. And a line I have to say a few times on valuations, just because you need that amount to move, it doesn't mean your house is worth that. I'm surprised I don't get chucked out of more valuations, to be honest with you. That would be, yeah. But yeah, buyers and sellers, if they can't get the price or the property they want at the price they want, they are not looking to buy or sell. But again, that happens in any market. Any market. It's just a little bit more frequent at the moment. But for every one or two people we take off our main list, we're getting calls on a daily basis of new applicants looking to view their houses we've got on the market. So it is very swings and roundabouts. It is very swings and roundabouts. But there are some people who are holding off 100%. Christine goes on to say some of the reductions are like £25,000, so it shows just being listed to exactly. And I'd imagine, Christine, that a £25,000 reduction in my area would be quite a chunk. So your area, 25 grand West Sussex, more expensive than where I am. So what's that roughly as a percentage? You would say where you are? Because yeah, be interesting to know. 25%. It sounds like a lot, but if it's on for £600,000-700,000, the grand scheme of things, it's not a huge amount of money. It sounds crazy, isn't it? 25 grand's not a huge amount of money. That's nuts. Right, let's go back to the report. Our house price index tracks achieved prices. It is not an asking price index. So that's a little dig at Rightmove, because Rightmove's one they release every month is on asking prices. So Zoopla are saying this is what estate agents are agreeing house sales at. So it's pretty darn the best up-to-date data you're going to get. However, trends in asking prices provide more important insight into where achieved prices are likely to move in the next 2 to 6 months. One important measure we track is the proportion of homes where the asking price is being cut by more than 5% to attract more demand and boost the chance of a sale. Excuse me. The measure is now back to 2022 Q4 levels, with 6.5% of homes for sale seeing a 5% prices a level reduce their price by at least 5% to get more interest, and that would purely go they originally, whether that's there. The scale of asking price cuts is greatest in southern England, while downward pressure on prices is greatest. Sign that buy if they are serious about achieving a sale. It's one reason we believe achieved prices will continue to fall over half to in 2023. 4%. So yeah, there's a lot of 25 regard. Yeah, I mean, it should be bigger, Christine. Hopefully we're back. You've got the white spinning circle. I've just checked my stream, Chris, back here. So it's probably my internet, Christine. It's probably my internet. Yeah, it is. Right, shifting the mix of homes selling towards delay moving until the outlook for mortgage rates looks lower or is lower. Sales volumes are bearing the brunt of higher mortgage rates and are expected to be 23% lower over to 2022. So they do compare some of the house prices. Our data shows sales volumes holding up in more affordable areas of the UK, specifically Scotland and the North East. Smaller homes with the same period over the last 5 years, we find that agreed sales of family homes, larger homes, excuse me. In our view, this will continue to suppress sales volumes while mortgage rates like High Wycombe, 3 beds in High Wycombe, 400k May. Wow, that's a big drop. That's a big drop. I mean, 400 to 350. May, June, July, 3 months. That house should have been reduced after 3 weeks. That's my advice to sellers. All I can do is advise sellers what I feel I can get their house sold for. And if I don't achieve that in 3 to 4 weeks, my advice to them is reduce your price or change estate agents. If I can't say to you or prove to you that your property's had the best exposure and it's people not wanting to view that's a problem rather than my advertising and my work ethic and work, whatever you want to call it, then the answer is reduce your price. But most sellers, it's always the estate agent that's the reason why their house hasn't sold, not the fact that their house is too much money. Some sellers do reduce, but yeah, more often than not, they say, yeah. If the house doesn't sell, we'll reduce it, no problem at all. You give them a call after the 3-4 weeks sometimes, say, right, look, we've only had one viewing or no viewings or what have you. It's been in front of 20,000 people and only 500 people have clicked on the details, and none of those 500 people have wanted to view. Let's get the price down. No, no, you're not doing your job properly. I'm putting on another agent. It's like, okay, bye bye, bye bye, ta-da, ta-da. Yes, Peter, it is my internet. I do apologise. I do apologise. Christine, yes, exactly, Barnes. It's coming down in the £25,000 chunks, and it's a lot of dosh on a mortgage. So it just shows it's been listed way too high. If they, yeah, yeah. And if a seller can reduce 25, £50,000, I don't know whether they've won some money or come into some money over the last few months, which means they can drop that sort of money, or it could just be sellers who want to move rather than needing to move. And they're the ones who will put their house on the market for a certain figure. And if they can get that price, they'll sell. If not, they're in no rush. They can let it go a little bit. If they have to reduce, we will do in the future. You get those sorts of conversations with sellers who say they're not in a rush. And that's the worst thing I want to hear as an estate agent. And as a buyer, you want to hear that as well, that the seller's not in a rush to sell. It's like, how much time and effort goes into putting a house on the market? It's getting longer and longer and longer, the more checks and work we have to do. And this isn't an estate agent moaning about my job. I suppose I am, or looking for sympathy, but to put a house on the market is so much work, so much work. And yeah, it's it's a pain in the ass when you hear, oh, I'm not in a rush to sell. It's like, oh, God, it's crazy, crazy. 25 grand is about 2 years mortgage payment. So just go, yeah, 100%, 100%. Steve M, are estate agents trained to give valuations? Surely sellers should be doing their own valuations based on their own area they live or are moving to. So I first started valuing properties in 2004, maybe 2005. And back then, we didn't have Rightmove, or Rightmove wasn't as big. We didn't have digitalized land registry or anything like that. You had to go by what you had sold yourself in terms of comparable properties, or you'd look in the local paper to see what estate agents were advertising they had sold. They weren't saying the price they had sold for, but it'd give you an indication of what the right sort of price bracket would be. So you didn't have the information that we have now, which is you can go into the back end of Rightmove, look at houses that have been off and on the market, when they got reduced on Zoopla, how many views they've had. You've got all sorts of technology and sources out there, resources that you can use to value a property. But what we do is, first and foremost, is we go through the houses that we've sold, or similar houses that we've sold recently. And sometimes that's not exactly possible because they're different roads, different sort of types of houses, different conditions and stuff like that. But it gives you a great baseline. So when you go into a property, you know, if you go into a 3-bedroom semi on a 1980s housing development, then 1 3-bedroom semi, the footprint is roughly the same. You then just go round and add, subtract, depending on condition, size of garden, whether it has a garage, those sorts of things. But that is based on your recent sales, the price you've recently sold a similar property at. Whereas what I'm noticing is that estate agents are showing sellers, well, this 3-bedroom semi is on the market for 300. Yours is worth more than that because it's better. So let's put yours on for 320. And that's the wrong advice, because they're going by asking prices and not actual sold prices. But yeah, that's what agents should do. Look at what they've sold themselves, then look on Rightmove to see what similar properties, what their advertised price was, because that doesn't mean that's what they've got. And just stress that on the valuation, that this is what this comparable house was on the market for. Now, I don't know what it sold for, but at this price, it was enough to generate a sale. But we'll have to see what offers come in over the next 2, 3, 4 weeks to see if we are priced right. And if we're getting the same offers at the same level, then that is the market telling us that is what your house is worth. And that's what you should probably look at accepting if you can physically afford to do so. But training per se, every agency is different. Every agency is different, but that's how I've been trained, is to go by what we've sold personally as a comparable, and then go on to Rightmove to see what other properties have been advertised for that have sold very recently. If you're an agent watching this, let me know if that's what you do. Ashley, late to the party. Good to see you all. We'll have to listen to the first half hour. That's great. Thank you. It's a lot of me reading, Ashley. A lot of me reading. But thanks for joining us. Lovely regular as well. A nice hi from Christine and a good point, Lee. Always like to hear that. Always like to hear that somebody agrees. It doesn't happen too often. Doesn't happen too often. If you are logged in, guys, and you are watching the stream, it'd be really great if you could give us a thumbs up. It really helps get this channel out to as many people because I want to help as many people buy or be more informed as possible. That would be great. Where are we? Should we read a bit more of this? Let's read a bit more of this. Where do we get to? New sales of 3 and 4 bed homes have been hit the hardest. Did we read that? Sales of smaller homes and flats have fallen to a lesser degree. We did read that. We did. See, I rabbit on and I lose where I am. And I'm a bit rusty at these live streams. I've been so sporadic over the last 6 months. Here we go. This helps. This helps show. So 1 bedroom flats, 10% average fall in sales agreed. 2 bedroom flats, 9% fall in sales agreed. And the biggest drop is those bigger houses that people are struggling to afford to buy. And potentially those sellers who are finding it hardest to pay their bills because they're the ones whose mortgage payments have gone up monetary more and their cost of living has gone up monetary more as well. As you see, as you get to smaller, the demand is still lower, but not as much as these bigger houses. So let's get on to see what they say for the second half of the year. The outlook for market activity and prices depend on the trajectory of mortgage rates. It will be influenced by market expectations for how much higher base rates are likely to increase to control inflation. The latest inflation reports are starting to show the impact of higher base rates feeding through into the economy. It looks less likely that the Bank of England will need to raise interest rates as much as financial markets expected just a few weeks ago. It's very hard to keep up with all that stuff, isn't it? The average mortgage rate for a 5-year fixed rate at 75% loan to value has reached 5.4% compared to 4% in spring. Mortgage rates look likely to peak over the summer. The underlying cost of a fixed rate finance for banks has fallen by 0.6% over the last 3 weeks. This will take time, unfortunately, to feed through into mortgage rates, which could fall below 5% this autumn. Higher rates over a longer period remain a key risk. So banks are very keen to put the rates up straight away when they need to. But when it comes to bringing them down, they go down like 0.1% at a time or 0.0% too. But when the rate goes up, boom, it can go up 1% overnight. Very slow to pass on those savings to anyone else. House prices started to fall in Q4 of 2022 as mortgage rates for a 75% loan to value. Did I just read that? Probably did. We expect modest price falls over the coming months, with UK house prices expected to fall by up to 5% over 2023. This would mean that prices are still 15% higher than at the start of the pandemic, even if mortgage rates fall back down to 4 to 5% window later this year and into 2024. We expect house price growth to remain very low for the next 1 to 2 years. Okay. So they're predicting maybe a fall of 5% this year, then the next 18 months to 24 months, them to sort of level off or maybe see some ups and downs. House prices are likely to lag behind the growth in price inflation and earnings as house prices adjust to a higher level of mortgage rates. Southern England and the Midlands are where house prices and incomes need to realign the most through very low nominal growth or modest price falls. We expect sale volumes to remain in the region of 1 to 1.15 million, with demographic, social and cost of living factors continuing to drive motivation to move home. And then we've got all the graphs, which if you want to see that, I'll post it in the comment section. I can't post it; it's too long. But I will put it in the. I'll pin it as a comment on the screen at the end of the live stream. Let's go back into the comments, see if I've missed any. People should have reached their stress test for their mortgage now who took them out. Yeah, but the problem with the stress tests, Christine, I will had to put my hand up to this as well, is when you're applying for a mortgage, I know what I did, I know a lot of other people did, is you paint yourself in the best picture possible for your lender. So you cancel your subscriptions, you don't go out and do as much. You cut back for 3 to 6 months before you get a mortgage, as all mortgage brokers advise, to make yourself more attractive to lenders so they find it difficult not to give you a mortgage. As soon as you've bought your house, if you can afford it, you live to your means. I know I certainly do, and I shouldn't do, but and things come up as well. If you need a new car or you need to refurbish your house, you may take out a loan to do X, Y, and Z. You sort of live. Again, I'm stereotyping. I'm thinking everyone's the same as me, which clearly isn't true. But I know a lot of people who, once they've got their mortgage, they then go and get a kitchen on finance, or the windows, or heating, or something like that. So um, the stress tests do become a little bit worthless a few years down the line, because people's situation changes. You have children that cost more money, and do you know what I mean, you should inform your lender if you have kids, etc. So, but some don't. Life moves on, life changes, than that initial stress test. And a lot of people who did take out a mortgage 2, 3 years ago, who now are having to remortgage and are worried about the rates, are because they have, wrongly or rightly, overexerted themselves because they've got used to these low interest rates. I mean, to be fair, if my mortgage ran out in October, like it should have done if I hadn't changed to go to a 5-year fix, I'd be thinking, "Cool, it's going to be tight. It's going to be tight." I think my quote's gone up to five, and I think I did it about 2, 3 weeks ago, so it might even be more. But I'm at 2% or just below 2% at the moment. It's like 5.5%. It's just, it's eye watering. But I had a first time buyer in the office, going off subject a little bit. When was it? Sunday. I worked Sunday, just gone. And they'd been looking for about a year and a half, but because she didn't have a job and needed a certain amount of wage slips before she could buy, I sort of said, "Oh, you must be gutted that you couldn't buy a couple of years ago, or at least have the interest rates of a couple of years ago." And they said, "Oh, no, 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 we can afford the current interest rates. And if this is as bad as it's going to get, we know that when we come to remortgage in 2 or 5 years' time, that our mortgage is going to be lower." And I thought, what a optimistic way of looking at things. And I hadn't heard that. As a first time buyer who was like, "Yeah, we can afford that. We don't mind buying now. We've done our research." That maybe they knew we priced properties correctly, so they weren't overpaying for a property. They were buying a 3-bed semi, um, which they probably could have afforded a 3-bed detached or a 4-bed semi last year, but 3-bed semi, family home, going to be there for a number of years. Great location, great schools. Got a new job in the police force, so probably not going to be made redundant. So quite a stable, touch wood for them, situation that they're in. And they were just happy that they could buy a house and start a family. And in their mind, they're buying at the right price for them. They can afford the mortgage payments. And their view of it is, well, surely we're paying, if it is near the peak, it's not going to get any worse for us when we need to remortgage in 2 or 5 years' time. And I just thought that was just maybe not the best way to think of it, but it was a thought that hadn't come into my mind, but a buyer had shared. So I just thought I'd share that with you as well. But now increase will put people beyond point of being able to pay repayments without taking a lodger. Yeah. I think that's what Martin Lewis and the Chancellor were doing, about extending people's mortgage terms or going on a interest only mortgage for a certain amount of time to help reduce the short-term pain of mortgage rates. Not the long term, because you'll end up paying more interest over time or paying more back, but yeah, to try and sort of help people not get repossessed. Ashley, your optimistic buyer has the same attitude as I do. If buying now at what is historically the usual interest rate of roughly 6%, you won't be caught out down. Yeah, I think that's, I mean, I can't believe I hadn't thought of it. There's a lot of doom and gloom thinking, "Oh, I feel sorry for people at these rates." But if you can buy a house now and these rates are historically, well, historically for the last 15 years high, but not too much higher than what they are in a normal market of around 4%, then some of these people could be seeing a 1.5%, or even more drop in their mortgage interest rate when they come to remortgage in however many years' time. But yeah, I as I've said before, if you're not overpaying, you can't see your financial situation changing, and you're going to stay in a property for a number of years, then why wouldn't you buy if you found the right place? That's my opinion. That's been my opinion for well over a year, year and a half. I think, was it September last year? I might have said it. I think because interest rates were going up. Yeah. Do I think government making short-term measures is only delaying the inevitable housing crash for a mere 6 months? It will. What's the saying? Kick the can down the road a little bit. I would say it certainly will kick the can down the road. But my wife, she got made redundant 6 weeks ago, and I mean, we're fortunate enough that it wasn't an immediate concern for us, but she managed to get a job in a week. She's amazing. 3 interviews, and she's at work now. So I think if there are redundancies, I still think there is a strong demand for employees. It's the repossessions which go on. If that takes longer to happen, and if we start seeing data that repossessions are going up, which they're going to because they were stopped during the pandemic, so there was very, very few repossessions during the pandemic. This year, we've seen like a massive increase compared to the pandemic levels, but I wouldn't be over concerned because there were so few during the pandemic. Any increase is going to be seen as a large increase. But if we start seeing gradual or even an increase going up and up and up each month, then yeah, we're going to be seeing potentially a lot of people losing their homes, potentially. But it's all, no one knows, do they, Christine? No one knows, and it's difficult to predict. It's really difficult to predict. Steve will get a variable I can't say that word, variable rate mortgage at the moment. Yeah, you've got that. I mean, there are talks of them putting them up again, aren't they? You think what America's just done? Inflation's at like what, 3%, and they've still whacked it up again today or yesterday. So even if inflation does come down, there's still a risk that the Bank of England will put the base rate up, which isn't the only factor when lenders pricing their mortgages. They base what they're going to lend your money at based on swap rates and how much they can borrow money. So they're getting charged 3%, they want to make 2% to lend you money, then yeah, they'll price it at 5. So swap rates is a key indicator of where mortgage rates are going, not just the Bank of England base rate, but it certainly does have an effect. But variable, if you don't mind it going up a little bit just to come down again, then yeah, that's something which I would discuss with a mortgage broker or a financial advisor, not me, because I could get sued. If you want to speak to a broker, let me know. Drop me an email, lee@leeeverettproperty.co.uk. The actual value of property is at least double what it should be. It's difficult because if you go back to when I was not even a twinkle in my mum and dad's eye in the 80s, early 80s, when house prices were one person's wage for 10, 15 years, whatever it was, the deposit was somebody's wage for 1 year or 2 years rather than 10 years is what it is now, or whatever the rate is. Banks have had to do joint income mortgages, so 4.5 times joint income, 5.5 times joint incomes to keep up with demand. And with more and more people being able to buy properties, they've just raked it in. They've raked it in, and I can't see. And some people will disagree with me that prices are going to be 50% cheaper in some areas than what they were in August last year. I can't see it. I can't see it. I've got no other reason or data, but just the thought of the mess our country and potentially the world would be in if house prices dropped 50% is mind-boggling. Absolutely mind-boggling. Bearing in mind with a world global financial crisis we saw around 15 to 20% depending where you were. So we were looking at over double that in some areas. Yeah, I can't see them halving in price. I really can't, Christine. I wish for some people it would, so they could get on the ladder. Not me, because I'd lose my equity. But yeah. Supply and demand. If there's demand for people to buy, they're able to buy, then it will go up. Like with any product, any product. Glad to hear your wife got a job again so quickly. It must have been it was, and yeah. She's actually getting a bit more money now as well. Ironically, she's getting paid to be away from me at night. She must love it. But it means I get to do more live streams. So at least once a week, if I've got something to talk about, and there's enough guys wanna watch. But at least I won't be chasing after you, so you didn't sell them to silly high price. It's going to be pretty for the estate agents when home repossessions become more common. It's not going to be. I mean, agents sell the repossessions, so yeah. I mean, it's never nice. I mean, I've been to 2 repossessions where I've had to be there when the bailiffs have been changing locks and all sorts, and it's bloody horrible. Bloody horrible. It's not something I want to see much of, and that was during 2008. So I hope those people were okay as best they can be, but I'm just not seeing the last repossession I had was probably 4 years ago, way before the pandemic. Not had one this year. Not had one this year, or last year, and I've not seen any agents advertising repossessions, because when there is a repossession, generally they have to put I've forgotten what they call it, a sold disclaimer in the description to say XYZ estate agents have received an offer of X amount on this address. Anybody wishing to make an offer, please do so before exchange of contracts, something like that. I've not seen any of those in my town. So whether that happens in the future, I don't know. But yeah, there will be more repossessions, but hopefully people can get themselves sorted out before it gets to that point. And I think with what I've experienced personally with my wife, there are jobs out there if people want to work. And if you want to pay your mortgage, you take whatever you can to get those bills paid. You do what you got to do. Having a roof over your head is the most important thing you can do. And my experience, people, it's the last thing that they want to skip a bill on is their mortgage payment. So it's going to be really bad if they don't. And I just don't see having enough repossessions to make prices come down that much. Cracking hours. This is where it's going to be different for every area, Christine. But I think my estimate is 10 to 15%. I think every area is going to see an eventual drop when we see the bottom, which I don't know when that will be. Maybe end of next year. I don't know. No one knows. But everywhere's going to see a drop. I predict, and you can come back and tell me off if I'm wrong. But yeah, I just can't see it. I know a lot of people want it. And are you talking about 50% off of where they are now, or where they were in July, August, which was the peak of the market? Yeah. I think 50% from the peak is still probably a bit optimistic, I would say, but I don't know. But I mean now. So they've already come down a little bit. Say in the last year, they've come down 9% according to the growth has stopped by 9% according to Zoopla. So you think, and on top of that, another 50%. I don't know. I've got my fingers crossed for you. I hope it happens so you can get the house you need, Christine. I really do. I think ones like you, Lee, will be okay. Good. Thank you very much. That's lovely to hear. I just try. I try. I think I've told this story before, but when I'd never planned to become an estate agent. I went to college. I was studying business, law, and history, and I'd done it for about 2 weeks and didn't like it. So I just jacked in my sixth form college. Was walking home, bricking it. I got to tell my mum and dad that I've quit college and I haven't got a job lined up. And as I was walking home, I saw this T-Boy advert on a estate agent's board outside. It said office junior. Got an application form, handed it back straight away. Um, by the time I got home, they'd called and left a message on my mum and dad's house phone. I didn't have a mobile at this point, which is really embarrassing. I was 16, 17. So we're talking 20 years ago. I didn't have a mobile. And they left a message on the answer phone, which my dad heard, invited me in for an interview. So I had to tell him I jacked in college to become an estate agent. Not even an estate agent, a T-boy in an estate agency. But I knew he was probably a bit disappointed because at the time, and even now, estate agents don't have the best reputation. But I know I do what I can to be as open and honest as possible to my clients and their buyers, and hopefully through this YouTube channel, which he used to watch. He used to watch. Yeah, don't know why I don't. But yeah, I've always tried to be as open and honest as possible, and it has lost me out on a lot of business, but that's just what I do. It's just what I do. This generation is prone to, but that could be down to social media. There is so much. So the whole saying, sex sells, bad news sells as well. And I remember, I hate doing this, but moving home with Charlie, his channel, he was advising sellers. I think it was late last year to reduce their price by 20% to get sold now. And in my area, that would have been the absolute wrong thing to do. But if some sellers were thinking, oh crap, if house prices are going to go down up to 50%, if I sell for 20%, I've actually saved 30%. So you will get people who panic like that, who don't do their own research. So yeah, there are people who will panic, and if they make the wrong decision, that's up to them. As long as they've done it on their own knowledge and their own backing, rather than relying on even people like me, because my expertise is only on my local market. It doesn't apply to anywhere else in the world where you're watching this. It's just my personal opinion, what I'm experiencing day in, day out in my little part of North Essex. And then you guys are telling me other things that happen in your areas. So we're all learning. We're all learning. But yeah, people do panic. And if they don't do their own research, then they, I think they'll be, just think before they press the wrong thing. Didn't know about the bit on the ads for repossessions. I've seen written on quite a few adverts for house here in Belfast recently. Most have offers above asking price. So you're in Northern Ireland then? Didn't know that. So most repossessions, I think it's called a public. Oh, what's it called? Oh, I forget what it's called. But yeah, most of the time on a repossession, we have to put some sort of statement that we've received an offer of X amount, and basically we're inviting people to gazump the current buyer, which we don't like doing. Not all repossession companies do it, but the vast majority do. But yeah, they generally have to put that on there because they've got to be seen to be getting the most money possible for that property to pay the lender back. So we have to advertise the price that somebody is paying for a property, which is public notice. That's it, Ashley. That's it. I would have got there eventually. Yes, yep. It does create panic. Be good to see before he predicted his 35% house price crash, and he was more concentrating on estate agents and helping homeless and stuff like that. And he really sort of blew up when he made his house price 35% prediction. And obviously got a lot of attraction since then. I try to watch all of his stuff, but he puts out so much content. I just don't have enough hours in the day to watch everything he does. I try and follow him on Twitter, but again, he's on it a lot. I don't know how he earns money if he's always making videos and on Twitter. Maybe that's how he makes his money. I don't know. But yeah, I have to fit these things in between family, work. Yeah, difficult. But no, I'd be open to that. But the thing is, Charlie, he's got a lot of data, and he's got the housing stig, isn't he? Which he can sort of liaise with about data and stuff like that. A lot more intelligent people than me. My pure prediction is based on my gut and what I'm experiencing right now. And if that ever changes, I'll be the first to say on this channel, whoa, I've noticed some big changes in my area. It could happen in your area. It might not. But at the moment, I'm not seeing that panic happening just yet. So we might agree. And I'd be made to look so stupid if we done a collab or an interview with Charlie and Honest Money, because I've got no data apart from the data from my one office, which is so small in the grand scheme of things. It's purely just my gut, and his audience would generally shoot me down anyway. Because if you want a certain thing to happen, you will naturally not levitate. What's the word? Go towards news that you want to hear. So if you're a buyer wanting to buy a property, you're more likely to watch, the YouTuber who's saying that prices are going to reduce by 50%, rather than the one that's saying them potentially 15%, aren't you? So his audience I think we'd have a bit of a crossover, because I know a lot of people do watch mine and his. But I think the vast majority probably don't watch mine because I don't align with what he says. I believe there's going to be a drop, just not as much. I'm trying to be very diplomatic because I do like what he's doing. Yeah, where are we? Is it? Yes. If you still advertise in the newspaper, the repossession company, which isn't the bank hire somebody else. It might be another division of the bank, but it'll be a different company that then instructs the estate agent with a long list of rules and regulations they've got to do, inspecting the property, market updates every week, viewing feedback, and then when you've agreed a sale, going through all the different steps the buyer's got to do at certain times and all that sort of crap. But yeah, newspaper and on Rightmove in the summary will generally be what the public notices. So thanks, Ashley, for saying that. Yeah. Christine's on the main online portal here called Property Pal. Very few people would look at a newspaper adverts for property here. Not sure. Same. Yeah. Very few agents actually advertise in the newspaper anymore. So it would mainly be on online. I think Charlie does too much because he cares, but it's going to burn him out. I agree. Social media sucks people. It does. I'll say I don't know how he does it. I mean, I think he's got kids as well, isn't he? Homeschools kids. He's got his own best agent business. He's had other businesses in the past. Yeah. My wife would kill me if I spent more time in front of a camera than with her, which she should do. He should. But no, yeah, I do worry for him sometimes because he does. He does put in a lot of content. We still call X Twitter. Hey, did I say Twitter earlier? It's X now, isn't it? Yeah. But you got other knowledge, which is really easy. Yeah, I say I've got a small piece of information that Charlie doesn't, but he's got a lot more information than what I have. So I still think I'd be shot down, especially by his audience. And Ashley's Christian saying thanks to Ashley for that. So guys, if you don't have any more questions, I'm going to wrap up that live stream. We are getting to 11:15, which is late. Thank you so much for joining us. If you haven't liked the stream, please give us a thumbs up and put a comment in there of where you're watching from. If you have any questions, pop it in the comment section. I'll try and get around to answering those as quick as I can. Or email me, lee@leeeverettproperty.co.uk if you want a solicitor, mortgage broker, or just a chat. Yeah, if you're lonely and want to chat about property, then yeah, drop me an email. But thanks again for watching, guys. And I will see you at some point next week when I get my wife's rota. Take it easy. Love you lot.